You're watching the Daily Market Comment by Mario Sajkiriakos. I'm Christina Marujos, and thank you for joining us at XM.com. Hopes for a peace deal in Ukraine and signals that China will open the stimulus tabs wider helped global equity markets to shake off the blues this week, even as many of the risks behind the recent rout continue to linger. Between the ongoing war, roaring inflation, central banks raising rates, and the growing possibility of a recession, investors have had a lot on their plates this year. When so many narratives clash, it is often a recipe for explosive market moves. Money managers are initially forced to play some defense by trimming risk and deleveraging, waiting for the right opportunity to jump back in. Some of them dipped their toes back into the market this week, lured in by equity valuations reaching pre-pandemic levels and a sense that most of the bad news is already priced in. The S&P 500 extended its winning streak yesterday and is headed for weekly gains of around 5%, with the Nasdaq putting on an even more impressive performance. It's difficult to say whether the market has bottomed already, but it looks like the worst phase of the storm is over. In the FX spectrum, the yen has been the biggest casualty this week amid a double whammy of improving risk appetite and widening rate differentials between Japan and the rest of the world. The Bank of Japan concluded its meeting earlier today and refrained from signaling that any policy changes are coming, happy to lag behind the rest of the world and exiting cheap money, even if it means offering the yen as a sacrificial lamb. It's been a tough week for the US dollar too, despite the Fed trying its hardest to engineer a stronger currency. Yield differentials actually widened in the dollar's favor, that was eclipsed by the improvement in risk sentiment, with hopes for a ceasefire in Ukraine driving the ship instead. Elsewhere, the Bank of England raised rates by a quarter point yesterday. There was a clear sense of caution among policymakers who toned down their optimism around the economy and adjusted their forward guidance to open the door for a potential pause in tightening. Sterling fell initially but managed to recover later on with the risk tone. The big winners of the week have been the euro and the commodity-linked dollars. The euro is entirely at the mercy of war headlines at this stage. While hopes for peace have allowed the single currency to recover lately, next week's latest business surveys will reveal the economic fallout of the war and whether Europe is tipping into recession. Thank you for watching the Daily Market Comment at XM.com. Have a great weekend.